Okay, let's talk health insurance. Health insurance is not what it used to be. Health insurance used to be affordable, but also health insurance didn't have to cover pre-existing conditions if you had them. Therefore, that was one of the reasons that the Affordable Care Act came around, because it wanted to give people an opportunity to have access to health care that covered their pre-existing conditions, amongst other things. But there has been some drawbacks to that, and you need to understand how to maneuver and navigate an insurance. And I don't care if you have insurance through your job or if you don't have insurance through your job. If you have insurance through the ACA, or you have, some of you, a lot of you have what's called these indemnity plans, and you were sucked into those because they have all of the bells and whistles that you want to hear. And a novice person to health insurance is looking for, I want a low deductible. I want low copays for my doctors and my specialists. I want low copays for my prescription drugs. And I want to make sure that my premium is low. Well, I got news for you. The lower your deductible, typically the higher the premium, and vice versa. A lot of people don't want to get high deductible plans, but let me tell you why you should consider them if you add supplemental coverage to that. The only time a typical person is going to need to meet a deductible is if they're admitted to the hospital. Now, there's 4 reasons you're going to go to the hospital. Number 1, you're going to the hospital because it's a non-life-threatening accident. Number 2, a life-threatening accident. Number 3, a non-life-threatening illness. And number 4, a life-threatening illness. If you go to the hospital right now, everybody falls into one of those 4 categories. Guys, they have supplemental insurance that cover those things. When you get a low deductible, you sometimes spend hundreds of dollars a month and thousands of dollars a year, that you are wasting and throwing away. Now, you got to be better about what is pertinent to your needs. A lot of you like to go online, and a lot of you like to go and purchase health insurance online. If health insurance purchase online was that simple, there would be no need for an agent. Okay? It would be the equivalent of when you go to court. You can go to court without a lawyer, but it's probably not good to go to court without a lawyer unless you are well versed on the laws, because you could get yourself in trouble pleading to something, taking and accepting something, or going along with certain types of procedures that are being presented to you in such a manner. So you want to make sure that when you get health insurance, you want to, if you're a healthy person. Now, what would I consider a healthy person? A healthy person doesn't have to be squeaky clean, but a healthy person could be somebody that, they maybe have high blood pressure, they have high cholesterol, they have medications that are affordable, but they don't have to go to the doctors every month or so on and so forth. They just generally have to go to the doctors to get their checkups, their lady or gentleman visits, and those preventative measures. That's typically where most people are going to fall into. And that's the type of person I'm talking to. So if that's you, the correct thing to do, and there's different types of supplements and things out there, but the correct thing to do is, instead of getting a low deductible and paying hundreds of dollars more a month, you should get a high deductible plan and get you some catastrophic supplemental coverage with that. Now, here's why. The only time you need to meet a deductible is when you are admitted to the hospital. You're not going to go to your doctors or your specialist or your prescription drugs they're generic. You're not going to need to meet your deductible. You don't have to meet the deductible. That is the misconception. But if you have a high deductible plan, whether it's high or low, what the insurance companies don't want you to know is they already have the negotiated prices for every service that can be offered. They already have that worked out. So what happens is, when you have insurance, you go to the hospital, you go to the doctor, okay? You have a copay, all right? Or you don't have a copay. If you do have a copay, that can be misleading, because that's what they're saying you're going to have to pay when you go to the doctor. But they're still going to send whatever other bill or remainder of the bill, they're going to send that to the insurance company, the doctors will. And then the insurance company will already have that negotiated rate down. And then they will send you a bill in the mail 2 to 3 weeks later, and it's going to be called an EOB, which is an explanation of benefits. The explanation of benefits is going to be something that you can use. It's going to be something that comes to you, and it's basically, this is how much the doctors tried to charge you, and this is how much the insurance company is saying you're going to be responsible for. And that is even prior to meeting your deductible. Okay? So for an example, if you had an MRI that was $1,300, okay, without insurance, you definitely pay $1,300. But with insurance, with a higher low deductible, if let's just say they negotiated half of the price for that, okay, they have a negotiated rate for half the price of $1,300, which is what, $650. You would get a bill in the mail, and in the explanation of benefit, it'll say it was $1,300. You're responsible for $650, and then that $650 counts towards your deductible. And then that's generally how insurance works. Okay, so don't get overhyped about how the having set copays are for you, because typically an average doctor's visit is about $40-$50, and typically an average specialist visit is about $100-$150. Now, things may vary based on your geographical location and everything like that. You live in the further south, you pay a little less. You live in the north, you pay a little bit more. But generally speaking, what I'm trying to get you to understand is it's no need to pay an extra $100, $200, $300, $400, or whatever it is a month to have a set copay for your insurance. And how many times are you really going to use it? So let's just give an example, okay? Let's just say you try the type of insurance plan that you've been brainwashed to want. Let's just say that insurance plan cost you $500, okay? And let's just say if you're a pretty healthy person, you can get a lower deductible and you can get catastrophic supplements. And let's just say that comes out to be $300, okay? That's $200 a month. That's $2,400 a year. You can do something else with $2,400, and I won't get into that. But that is my point. If you have a high deductible, no need to be afraid. Your supplemental coverage will pay you cash. So let's just say you had an accident and you were in the hospital for 2 or 3 days, okay? And now you've got this, according to the ACA, the highest this year in 2019 is $7,900 max out of pocket. That means that's the most that you'll spend in totality, okay? But let's say you were in the hospital for a couple of days and you had a $20,000 bill. And you had an accident, and you had an accident supplement. And let's just say that accident supplement paid you $10,000. So let's say you have $7,900 max out of pocket. So that still leaves you with $2,100. A lot of times people don't account for, when you go to the hospital, just because you come back out of the hospital doesn't mean you're necessarily going to be ready to go back to do your everyday routine functions. So if you can't go back to work for a couple of weeks after you get out of the hospital, who's going to pay you? No one. But if you have that supplemental coverage and you want to go ahead and knock out that $7,900, the peace of mind of knowing no matter what else happens for the rest of the year, the insurance company's got it 100% if I met my max out of pocket. And then once you do that, you've got $2,100 left. Look, you can use the $2,100 to pay your bills at home. It makes so much more sense. And if it is a situation just like I said, and it saved you $200 a month, who cares if you're paying a bill to the insurance company with your major medical and you're paying in supplemental coverage to another company? It's smart to do that, because what would you rather pay? Would you rather pay $500 or would you rather pay $300? So it's important for you to understand the power of supplemental coverage. And they have all types of supplemental. They have accidents. They have hospital confinement. They have critical illness. They have cancer. They have so many different types of supplemental coverages. And if you understand how to use those things, and a lot of times the probationary period isn't that long. Sometimes it's like 30 days, 60 days, whatever the case may be, where you can't file a claim. But if you can just stay out of harm's way for 30 days, 31 days later, go out there and knock yourself out. Have a good time. And if something happens, you have the peace of mind of knowing that you're not going to get in financial ruin. Because remember, the number one reason, the highest, let me put it like this. The number one reason people file bankruptcy is because of hospitalization. And it's not because people don't have insurance, because 80% of those people, they have insurance. But the reason you go bankrupt is because when you can't go back home and do your everyday job, you're going to have to liquidate what you have to be able to pay your medical bills and to keep your head above water. And then next thing you know, you're going to have to file bankruptcy. And it's still not going to do you any good, because bankruptcy doesn't give you any income anymore. It just tells them to lay off of you. And filing a bankruptcy doesn't get you a job. So you have to plan for that. So I would recommend that if you do not have supplemental coverage right now, that you take a look with a trusted advisor and go over your health insurance plan, whether it's through your job, whether it's through on the individual space. Take a look at the insurance that you have so you can understand the gaps and the holes of your coverage, and then plug those gaps and holes and base it on what you can afford on a monthly basis. There's no need to go in insurance poorhouse. Just make sure that you have enough supplemental coverage to cover those gaps. So I hope this really helps you. If you have any questions, you can reach me at buckeyefinancial123@gmail.com, and I'll get back to you as soon as possible. Or you can just simply reach out to me at 804-909-5898. And that's my direct. If I don't answer, just text me if you have a question, and I'll be able to help you. I'll be happy to do that. Also, please subscribe to my YouTube page here, and I'll be bringing more content. And don't forget to share my information if you found this beneficial. Okay? Until then, please take care.